Hey, Tom Hegna here. We're at the Future of Digital Assets Conference in Manhattan, and I'm very excited about our guest here. We got Don Chamberlin. He's been in this business for over 20 years, started in 2022, the Chamberlin Group. He's conducted over 500 educational workshops. He's been in a new movie we're going to talk about. He's recognized as a top producer. He's from the St. Louis area, and so welcome, Don, to the Future of Digital Assets.
Thank you so much, Tom. It's great to be with you today.
So tell me, how did you get where you are today?
Well, we're in Lower Manhattan today for this interview and this conference, and this place played a big part in me figuring out my career. See, I was actually for 15 years in investments, mutual funds, stocks, bonds, that type of thing. And when 9/11 hit, it kind of changed everything for me. The stock market had been down in 2000 with the beginning of the dot-com bubble. And so when 9/11 hit, we were so emotional about it. We were upset what happened to our country and our citizens. And actually, coming over here today, I walked right past the 9/11 memorial, said a little prayer for all those who were affected by the events there. And the worst day of my life was the day after 9/11, 9/12, 2001. And that's because of what happened on 9/11, of course, but also that was the second day that the stock markets were closed. It was the first time since the Great Depression in 1929 that the stock markets had been closed 2 days in a row. I had clients coming to me saying, I don't know if I can stay retired. I think I might have to go back and work, right? And others that were going to retire were saying, you know what, I've got to make a plan to work longer. So I thought, I've got to change what I'm doing. I've got to really figure out a way to be able to protect people's money better. And at that time, I was managing 50 brokers at the brokerage firm I was with, and I decided to leave that and start my own business and figure out a way to better protect people's money so that I wasn't in that situation and my clients were in that situation where the volatility could affect their retirement.
You know, I was in Manhattan on 9/11. I was in Midtown, and I watched it all live, and I was stuck here because you couldn't even get out, and it was a very emotional thing. And I too walked by the memorial this morning and took a picture because I hadn't been there since it happened. So, Don, what trends do you see in investing?
Well, there's one big trend that we find that's out there. Actually, there's three that I can talk about now. The first one is, and that's kind of the big one, people are doing their own research now. They're actually doing a lot of research before they make decisions on what they're doing. They want to be more educated, in other words. I think it's a lot of the newer generations with baby boomers, Gen Xers, millennials. They really want to be informed about these decisions that they're making in retirement. And so what we do for that is we actually have classes that we teach in local communities and libraries and colleges. And then we also have online classes that we're really teaching across the whole country where people can go and get those ideas and do their research and get informed that way. The second thing that we're seeing that people are living a lot longer. And I know you know a lot about this longevity risk, right? So I read an article recently from Fidelity, and they quoted some Social Security information that actually said that if you're age 65 and you're married, one of those two people is going to make it till age 93.
Yep.
And you're probably familiar with this too, Tom, is that the health insurance and life insurance industry has known this for a long time. What is it, about 15 years ago, they changed the life expectancy tables to go to age 120?
Yep.
So they're expecting people to live much, much longer. They're expecting people to live into their hundreds now. So that's a big issue with making your money last. And that's the third thing is people have concerns today. There's concerns of paying too much taxes on 401ks and IRAs. That's up there. There's healthcare costs. That's a big concern. But the biggest concern by far, the majority of the people that have been surveyed have said they're concerned about running out of money in retirement.
Yep.
In fact, Gallup did a poll, and 54% of people are concerned that they can't have their same standard of living in retirement. And so this is a big deal. And how do you overcome that? You plan ahead.
Right.
If you can plan ahead for it, whatever age you are, there's things that you can do now, even if you're in your 20s or 30s.
Yeah,
right?
that will eliminate that longevity risk.
Right.
Yep, very good.
Right.
You're into safe money, which means you're into risk management.
Mm-hmm.
I see a lot of people don't see all the risks that are out there. They might see market risk or they might see interest rate risk, but they don't see all the risks. And there are quite a few risks out there, aren't there?
There's absolutely a lot of risks out there today, Tom. And we know there's interest rate risk, there's market risk, there's all kinds of different risks that are out there today that we hear about. Inflation risk, right? Recently.
Absolutely. Taxes could go up. You might need long-term care. You might die. There's just longevity. You might live a long life.
The thing that I really find is that people don't know about one of the biggest risks ever. So what I do is when I teach these classes, I addition than just being totally diversified and not knowing your risk level. The second thing that we do is called bucketing, and we call it income bucketing. What income bucketing is, it's a 3-bucket approach. So you have this first bucket that you have is your safety net. It's an emergency fund bucket. Usually you want to have 6 to 12 months worth of income in that bucket for emergencies or for planned expenses. Like if you're going to put a roof on your house or do something, go on a trip or something that you have to pay for, you put it in that bucket. The middle bucket is your income bucket. And so Social Security fits into that. And so does the pensions. But what's happened to pensions?
Yeah, less than 9% of people have a pension anymore.
Right. So most people don't have pensions. And the Social Security Administration says that Social Security will cover 40% of your income for the average American. So that means you've got to figure out the 60% of income from somewhere else. And for a lot of people, it's higher than 60% because Social Security is going to cover less than 40%. So that income bucket in the middle, you want to put about 10 years worth of income in that bucket, and that will help you protect over these risks, especially sequence of returns risks, because then if you have the right type of assets in there that aren't going to go down with the stock market, then you can feel comfortable taking that money out as you're in retirement and not worrying about the market. Now, the majority of the money goes in the third bucket, which is your long-term growth bucket. This is where you're going to use the risk assessment to figure out your risk level, and that's for long-term growth, so that now it can have a 10-year time frame to grow and go
and
up
weather
and down.
the ups and downs of the market.
Yeah, in the market, exactly.
Now, you actually made an entire movie called The Retirement Deception. Tell me about that. That's very interesting.
we made a movie. I'm in it in part, and 2 of our clients were featured in the movie as well. What we found, Tom, was that there's a lot of information out there from the media and other sources telling people you can't retire now. And we wanted to change that. We wanted people to feel like they could have confidence to retire, that they were really able to go into retirement and have a good time and spend time with their family, their friends, go on vacations and do things that they wanted to. So this movie is about success stories of people that planned ahead and actually were able to retire and live the lifestyle that they wanted. And there's about a dozen different families. It's two of the people that did the movie went all over the country interviewing these families and showing different examples of how they were able to retire.
How do you see the movement towards holistic planning? A lot of people talk about holistic planning. You're actually doing it. And what's the difference between talking about it and doing it? Yeah,
so we pioneered this concept about 11 years ago. I don't remember anyone else talking about holistic planning before that. And the concept is you may have some advisors doing some things for you. So like take your accountant, for example. They're doing your taxes, but are they really giving you tax advice on, how to spend down IRAs?
My experience is they're good at doing taxes, but they don't ever give you something to lower your taxes in the future. But that's what your tax advisors do.
Yeah, that's exactly right. So we have accountants on our team that do the taxes, but we also have tax advisors that look at tax returns every year for those families to have strategies to lower their taxes on a long-term basis. So, and then think about someone who might be doing insurance planning for you. Do they ever talk to your estate planning attorney? Is anyone even doing an income plan for you? Have you looked at a Social Security optimization report to really know when to take Social Security? So holistic planning is really 7 different elements, Tom. It's tax, it's the estate plan, it's income planning, it's Social Security planning, it's investments, it's insurance, and it's also healthcare. Healthcare is one of the top 2, I think, concerns of people in retirement. And most people don't even talk about it if you have an advisor. So healthcare and Medicare, we have specialists on our team that do that as well.
And people are so worried about Social Security, but it's Medicare that's the real problem. I can fix Social Security in less than 15 minutes for the next 100 years. I can't fix Medicare. I'm hoping Apple or Amazon or somebody figures that out.
Well, maybe we should have you in the government then.
Well, Don, how can people start this planning? How can they do the holistic planning?
Well, the best way to do it, I would say, is to attend one of our classes. So in the local areas where we're in 3 different states, and also online. So if you go to chamberlin-group.com, chamberlin-group.com, we have classes that you can attend online, get the information that you need. So the number one concern of people we're finding in starting anyway, whether people have a little bit of money or a lot of money, is Social Security. They don't know how to take it. They paid into it for their whole life, so they want to take advantage of it. Yeah. So our main course that we teach is Social Security. We've got some others on 401ks and taxes and things like that might be interesting. But that's really one of the best ways to start your education and the research that we find people doing nowadays.
Well, Don, I want to thank you so much. Again, we're here at the Future of Digital Assets Conference in Lower Manhattan today, and thank you very much for joining me, Don.
It was great being here. Thank you so much, Tom, for having me.